ambiguity and uncertainty is the biggest problem of this, right? You've got major institutional, Wall Street players saying this is a pause in the bear market. No, this is actually something that could see the rally run to the end of the year. On that spectrum, where do you sit?
I'm probably more likely in the camp that says the markets have run a bit too hard and we'll see a pullback. I think the risk of the markets going below the June lows is quite high. We have seen a good rally, though, and of course that does bring with it the possibility that we might have seen the low. But you have to allow that the inflation numbers do seem to be rolling over. That's certainly good news. But we've got a long way to go before we get inflation back to desired levels. So that means more action by the Fed. And in the meantime, we're starting to see weaker economic data out of the US, obviously last night with the New York manufacturing survey and also the NAHB home builders survey. That I think presages weaker earnings growth ahead in the US, earnings downgrades, and of course we're going through a seasonally difficult time of year. This August, September, October period is known for weakness in share market. So I'd be a little bit cautious at this point. I think the risk of a pullback is quite high.
Investors, when it comes to China, seem much more interested in looking at what this PBOC rate cut pivot means, their willingness to support the economy, and kind of pushing aside just how bad the numbers were and the fact that they're still dealing with these twin drags of the COVID lockdowns as well as the property market, right? Is the market being too optimistic about a recovery in China?
Possibly. I mean, if you take the Chinese share market, it had a little bit of a bounce out of its low earlier this year, but it wasn't an overly strong one. I don't think the market's got too ahead of itself, but obviously China is a big risk factor in terms of global growth, and those numbers were very weak. The policy easing we saw in response to that in terms of the slight reduction in interest rates isn't enough to arrest that. And of course, we've got ongoing uncertainty in China regarding potential more COVID lockdowns. And then, of course, you've got Europe, which is at very high risk of recession as well. So the global outlook is somewhat fraught still at this point in time. I guess the question investors have to face is whether that 20-odd% or so decline in share markets that occurred into June has anticipated all of that. Obviously, if inflation subsides and bond yields keep falling, then that may well be the case. Right. But if we go through a period where bond yields and interest rates still stay high, and you go into recession, then I think you'd probably have to say we've got a lot more downside in share markets to come.
Take a look at the 10-year yield in China, because we really saw that plunge after the PBOC rate cut, right? Is this an opportunity for foreign investors in the sense that it now seems to be pretty uncorrelated to treasuries, in the sense that we're seeing that policy divergence coming from the PBOC and the Federal Reserve? And of course, we have seen the relative stability, even if you look at the yield movements over the past couple of years.
I think there probably is an opportunity there for investors. We are seeing different directions for the Chinese economy or the Chinese policy response compared to that in the US. Obviously, China is ahead of the US. It started tightening a lot earlier coming out of the pandemic, and now it's seeing the result of that in much weaker economic data. And therefore, there is an opportunity there for investors. But it's a more difficult one given the complications about investing in China these days, the political risk associated with that, particularly when it comes to share markets. So that makes it a little bit difficult for investors compared to what might have been the case before these tensions arose.
Shane, just quickly, is the Aussie earnings season going to be as supportive as the US earnings season was in the second quarter for stock markets?
I think it probably will. So far, so good. We are seeing most companies report rising earnings on a year ago. And don't forget, the last 6 months generally in Australia has been pretty strong. The last 12 months, indeed, has been very strong, despite a lockdown at the end of last year in some states. So that, I think, is propelling profits higher. It's not uniform. There are companies which are struggling with margin pressure, cost pressure, and so on, warnings of slower demand ahead. But the numbers that are backward-looking are actually quite positive, and that is providing a bit of support for our market, much as it did in the US, as the US went through its earnings reporting season over the course of the last month.